Well, I can't differentiate between Greece and what Mario Draghi's talking about, but I would really think it's the latter. In terms of Greece, I know it's interesting news, but everybody down here says we all know what's going to happen. We're going to kick the can with a new bailout. Now, we'll let Michelle get in the nitty-gritty. Let's look at some charts. Look at an intraday of the euro. Okay, definitely a little lower, but open the chart up. It's already had its rally. That's pretty much the stencil on everything today, Becky. Let's look at a Boone. Boone yields are up a bit, and if you open the chart up, they're up a lot. These are the highest yields, so we close in the mid-70s since early December. Okay, now here's where it gets interesting with the U-turns. Look at a Spanish 10-year. Its rates are down today because it adjusted yesterday and the days before. Open the chart up, you clearly see yields are up. And the same could be said for what's going on in Italy. So I think if we had to summarize what's going on in the Eurozone, no matter if they preload or backload QE with August being a vacation month, traders are all over this, and it's still light liquidation mode for all the sovereigns. And the Southerns, well, they kind of led the way on rates higher, actually. Foreign exchange-wise, yes, the euro's going to be key, but I don't hear or read anything thus far that's a surprise to the FX traders regarding Draghi in the news conference.
All right, let's get to Michelle and get some of those details. Michelle, you're still here, not on your way to Greece just yet. What right. Are you hearing?
I've been listening to Draghi. I think Rick's correct there. I think Draghi thus far has gone out of his way to assure people. He said a number of things like full implementation of all of our monetary policy procedures, our monetary policy purchase program, the asset purchase program, is intended to run until 2016 or until or beyond if inflation isn't at our target. So, you know, we saw this sell-off yesterday in some of the European bonds when we saw the inflation data that was better than expected, and maybe there were concerns that there wasn't going to be as much quantitative easing as people had expected. But I think Draghi's trying to reassure people that that is not going to be the case thus far. And what he said, this is only the prepackaged speech. We now get to the Q&A where he'll be asked more questions in depth, one about this and likely about Greece as well, and the program that's going to be presented to the Greek Prime Minister later today in Brussels.
Michelle, when did he first kind of give that idea, that this idea that QE is not going to be as strong as some as expected yesterday?
I think there were concerns in the market yesterday when the inflation data in Europe came out, and we saw sell-offs in the broad averages in Europe and also in some of the bonds there as well, that maybe there would be concern that you weren't going to get as much QE. And thus far, it appears to me at least that he's reassuring people that's not going to happen. Sorry if I wasn't clear.
That would certainly account for some of what we've seen in the market's activity. But, Steve, there were moves even earlier this morning.
Yeah, there were. 7 o'clock, 7:15, it looked like the futures strengthened, and it seemed to come off a little bit from there. But just real quick, they did revise up, the staff did, the inflation forecast for this year from 0 to, hold on to your seats there, 0.3%. Wow. And so it's not huge. They're sticking with their growth forecast.
But it is the right direction.
It is the right direction, and that allows them to claim a little bit of victory. And in his opening remarks, Michelle, correct me if I'm wrong, he didn't deal with two elephants in the room. I saw no comments on Greece and no comments on the big story for us, I think, which is the backup in rates in Europe. And he hasn't spoken about that, but I am 100% certain he will be asked about that in the news conference.
And if we can point people to the deco that's on the screen right now, no point in commenting on the Greek talks, which would be the other topic, Steve, that we were just here, that hopefully he might say something.
Let me just say one word about trade here. The numbers came in better than expected, 40 billion versus 44, and that's going to flatter the second quarter growth numbers, which have been ticking up. It's still not that robust recovery that we were hoping for in the second quarter. Remember last year we did minus 2.1, came back with a really strong 4.6%. This year, we're looking at that minus 0.6, 0.7 right now. And right now, we're tracking about 2.5. We'll see if that gets ticked up. But what we saw in the numbers was real evidence that the port strike on the West Coast really had played havoc with the trade numbers coming in. And so you've had a rebound in certain areas that were hurt by them, and the other side, things going in, going out.